All right, good morning, everyone, and welcome to the flexible and easy to use letter of credit webinar hosted by myself, Derek Layton, and I'm here with my friend and colleague, Michael Young.
Hello.
Just a couple quick housekeeping items here. As you can see on the bottom of the slide, everyone should be muted during the presentation. If you are not, if you would please mute yourself, just kind of help keep this webinar a little bit cleaner. And then just in this webinar today, we are going to discuss those public unit deposits that you guys have on the books and how you can use letters of credit to securitize them, allowing you to manage your liquidity ratios and ultimately maximize your yields and income. And then just a little quick slide here about our Michael and myself. I joined the banking industry in 2014 at a local community bank here in Topeka, Kansas. And then I joined Federal Home Loan Bank in 2018 as a lending analyst. And then in January of 2020, I was promoted to lending officer. And then kind of what my role right now is just to assist our members in the product education and allow as well as educating them in our current and prudent funding strategies that we have been seeing throughout our district.
Yeah, and I'm Michael Young. Started my career at a nonprofit and came to the bank in 2012. I've been in several departments from accounting, enterprise risk management, and then came into lending. I'm accountant by education. You might catch on to that as we go throughout the webinar. And really, with Derek, we're here just to serve our members and present viable strategies that meet the needs of our members and are customized for their particular situation.
All right, kind of every webinar I do just like to start out by a slide showing our mission statement, and that is that FHLBank Topeka makes a difference by providing reliable liquidity and funding to help our members build strong communities. And as a lending officer and Michael, the senior lending officer on the desk, our goal is to be your trusted financial partner. We are constantly in communication with our membership throughout all 4 states. We can provide assistance and advice on a wider array of topics, not just letters of credit. So if you have any questions about letters of credit, MPF, collateral, advances, please feel free to reach out to us. We'd love to talk to you guys.
Yeah, and one thing about the letter of credit is it's really kind of a boring topic to discuss because it's so easy and convenient. So it's not something to overthink, and we'll get into that throughout the webinar.
For sure. And kind of just the first slide here throughout the webinar is just kind of talk about what exactly public unit deposits are. And they are essentially deposits from municipalities, school districts, state, county treasurers, hospitals, fire departments, your cities, et cetera. And then much like any individual customers, they do make deposits at your institutions. But the big difference here, as you can see on that last bullet point slide, is that the FDIC does require public unit deposits to be fully insured above the $250,000 FDIC limit, just in case the unlikely event that an institution were to fail. The FDIC doesn't want to negatively impact that municipality. So to ensure public units are able to recoup their deposits in any event, depositories are required to fully collateralize public unit deposits. And then just on this slide here, kind of just go into the 2 main forms of collateralization that we see for our PUDs. That first one, I'm sure some of you might be familiar with, is pledging securities, which historically, throughout the years, has probably been the most widely used form of collateralizing your PUDs. But then our letters of credit, which is what we offer here at the Federal Home Loan Bank, beneficiaries are starting to prefer this method over securities, just because it is a lot cleaner, a lot easier process, and that reason right there is why they are becoming a lot more popular. And then on this next slide.
And I'd like to chime in real quick. One thing I hear throughout speaking with members and even working with some of the auditors, external auditors for our members, is they really prefer the letter of credit. It saves up time versus going back and tracking that mark to market on that. So it saves not only internally but externally.
Yeah, For sure. And then so it's kind of some of the downfalls or troubles you might have with pledging some securities. First and foremost, in order to meet the eligibility requirements to be pledgeable for your PUDs, securities must be very, very liquid. This means institutions are typically putting comparatively or low yielding securities on their books just for pledging purposes. And that means the yields and spreads are potentially being given up, ultimately affecting your bottom line. Second, pledging security encumbers the highly liquid asset, which decreases balance sheet liquidity ratios, which again, in this environment, I'm sure not a lot of our members are too worried about their liquidity ratio since everyone's flush with cash. But as we start to churn out of this liquid environment, that is something everyone will want to manage to. And again, once the security is pledged to collateralize the PUD, it moves off balance sheet, is no longer included in those ratios. And then just last, but certainly not least, and Michael kind of touched on it here, and it requires a lot of effort by you guys and the beneficiary to monitor the market values and make sure the amount of the deposit is always insured, which often requires signatures to pledge and release from both parties, which I'm sure some of your beneficiaries might give backlash at if you're having to do that quite a bit. And that's really a big reason why beneficiaries are starting to prefer letters of credit to pledging securities, just to help cut down all the monitoring, and honestly, it just makes it a lot cleaner, kind of set it and forget it type of product. And then now, essentially, what is a letter of credit? Essentially, a letter of credit allows you and your beneficiary to use a Federal Home Loan Bank AAA rating to collateralize your beneficiary's deposit. Our high rating ensures the safety of your beneficiary's deposit and makes our letter of credit so widely accepted. If the institution were to fail, the public unit could instantly draw on their letter of credit and recover their deposit amount. And again, we've never ran across an eligible beneficiary, that says that they don't like a letter of credit. Again, it is widely accepted throughout all 4 states, which is Kansas, Oklahoma, Nebraska, and Colorado.
That's a good point, because even their auditors are liking the letter of credit, because it's kind of a set it and forget it amount. The amount doesn't fluctuate. And now we'll get into why use the letter of credit, aside from, we kind of touched on, it's convenient, fast, and operationally efficient, which allows your staff or yourself to reallocate that time to other more profitable tasks. We also allow letters now, we can issue them online, and we'll discuss that later on in this webinar. But you can also forward settle your letters. So say someone's going to be out of the office, or you just know the money's coming in and within 5 days, so for whatever reason you would like to just submit that letter of credit application early and have it settled in the future, you certainly can do that, and that can be canceled prior to settlement. The other benefits are the no more monitoring mark-to-market values, or if you forget about that forgotten call, that security that we've seen a lot lately, instead of scrambling to put on a low-yielding security, when one gets called away, you can actually expand and find another alternative that earns a little more pickup for you. Then, of course, there's improved liquidity ratios that we touched on, and I don't think that that's necessarily an issue for our general membership right now, but I think it's something examiners might be looking at very closely. And similar to our test your line, how you test your ability to access our funding on the advanced side, I would venture to bet examiners, depending on the examiner, would enjoy having that, hey, look, I can issue this letter of credit and free up all these securities and increase my liquidity ratios. And so issuing one might be a good idea of ensuring that you have all your forms in place and you know how to do it. And really, once we see someone do it once, they continually use it once they realize the ease. And there's obviously ways to boost the earnings, and we touched on that by putting on higher yielding securities. So you don't have to scramble, and this might be revisiting your investment policy. And depending on how many, if you have a limit on the amount you can purchase for a particular security and a high amount of Public unit deposits, obviously those pledge and releasing fees add up along with the operational costs and inefficiencies that come along with monitoring those and pledging and releasing. And so we've talked a lot about improving liquidity and earnings by using the letter of credit instead of pledging securities, but now let's take a look at a tool that we developed and how it works. So this is our letter of credit utilization strategy tool, and it's highly customizable. So if you would like to see the numbers relevant to your institution, please reach out to your regional account manager or Derek or myself, and our contact information is at the end of the slide. We've broken down the analysis into 3 sections, so let's take a look at each. So the first one just kind of covers your general collateral capacity that you have, and then here we get into liquidity enhancement. Now, in pre-pandemic, this was huge, and our letters of credit usage skyrocketed to free up those securities and allow members to expand the type of securities they were purchasing. So as we go through this, it's not necessarily good. It's not really necessary right now, but for planning purposes, this is a good idea to look at, and it allows you to monetize on loans that couldn't be used as collateral. And so, as we mentioned earlier, the tool was originally designed for that when loan demand was abundant. However, it's useful today because putting on new securities to compare the earnings impact between eligible and ineligible security types. This tool was developed to say, hey, if we take the capital, say a security got called, and we redeploy that to loans, what's the pickup? And we use a letter of credit to secure our PUDs. Now that it's still in play, it's just a little different comparison, because now you could compare what could I get on a treasury versus a ineligible security that you couldn't use to collateralize the public unit deposits, to see if the fee on the letter of credit makes sense. This does not include the expenses associated with pledging and releasing securities to secure PUDs, which is substantial depending on your policy limits. And it also excludes the dividend impact. We recently added the dividend benefit to letters of credit capital requirement. So a letter of credit supported with full Class B is reduced by 1.3 basis points, making that fee even lower. We'll roll into that here. The fee.
Yeah, one thing I just kind of want to reiterate real quick is that Michael touched on. We just obviously kind of had to show you guys a general, images of this tool. Obviously, all of our members are completely different. So if you would like us to run this tool and actually walk you through it, please reach out to Michael or I, or your account manager.
Yeah, and like I mentioned, with the planning purposes at the bottom, you can see the impact to your profitability ratios. That could help with any discussions with examiners. So now the cost and flexibility with the letters of credit. It is 12.5 basis points for your simple 99% of our letters. And then there's a minimum of $125 fee. So example would be a $100,000 letter would be $125. $100,000 letter for 1 year. The fee is charged on the date the letter of credit is issued. So that's also beneficial, especially around year end. However, you may elect to have the fee charged quarterly if the letter is issued for amount equal to or greater than $5 million. And then if you decide, say, because obviously we're aware that public unit deposits, they're going to fluctuate, right? They just don't fluctuate as much as normal. But you know when those are going to move, so you have an idea. But say you have an unexpected withdrawal of some deposits, well, we can cancel that letter at any time, and we'll refund you the prorated portion of the unused letter of credit. And that's still subject to the minimum $125 fee processing. Again, allows you can forward settle. If you forward settle on a letter of credit and decide to cancel it before it's settled, no fees charged.
All right, now we're just going to kind of move on to some of the required tools that are needed to issue letters of credit. And that first one is the letter of credit agreement. form. That is going to be very similar to your guys' credit authorization or credit resolution. You sign that one time, send it in, you guys are good to go. Until you need to change, add or remove someone, and you just sign that again. Then you have the standby irrevocable letter of credit application. That is what you would send in each time you do issue a letter, so you do have to fill that out each time. And then the second bullet point here, just kind of talks about our members only login, where that's kind of your home base for all of your, where you can view all your letters. You get your fee tickets on there, downloading existing letters of credit, and then of course, obviously get all the required documents that are needed to issue the letter of credit. Now we'll kind of move on just to the letter of credit system as a whole. Back in October 15th of 2020, we enhanced our members only and letter of credit process. So you guys can actually issue letters of credit online now, which is awesome. It's one thing that we're really proud of here on the desk and at the bank in whole. It just makes it super easy for our members to issue letters of credit. And then again, when you do issue a letter of credit, you guys, all of your letter of credit contacts at your institution and your beneficiary will receive an encrypted email as soon as the letter of credit is issued. That way, you and your beneficiary have a copy of that letter of credit. And in this, I kind of just wanted to highlight on these slides exactly how you would issue a letter of credit online. And then you just simply log in to members only, hover over that letter of credit tab, and then go to that application button there that is highlighted. And then this next step, this is it. You can have letter of credit done in a minute. There's 5 fields here that you got to fill out. Any beneficiary that you guys have already issued a letter of credit for will show up in that drop-down box. Select the issue date. Again, you can go out 5 days. Past the day you log in, and then expiration date, amount, and then if you want multiple if you want multiple draws or not, you would choose that. You hit submit, and you're done. It instantly issues that letter of credit. Then you guys receive the email, and so does your beneficiary. And again, so if you guys do issue the letter of credit, 2 or 5 days out ahead, at 9 o'clock that morning you want it to be issued, it'll get issued automatically, and then again, you and your beneficiary will receive that email, so that way you guys have the peace of mind, knowing that letter was issued.
Yeah, and to add in, you just change that issue date to whatever date you wanted it settled, as long as within 5 days. And another thing, if your beneficiary does not become available in that drop-down menu, it's likely because it's the first time you've issued a letter of credit to that beneficiary, so we do need to enter that into the system on our end. So sometimes it's best just to fill out the application and send it to us, or you can just give us a call or an email with the information, and we can enter that for you.
Yep, yeah, that's a great point, Michael. And then on this next slide here, just kind of our more traditional, we do still have that PDF application for you guys that you can email or fax. I think in today's day and age, email is a little bit better than fax. And just another kind of peace of mind thing with the email, if you email our lending inbox, we'll always email you back. That way we got the letter and we're going to issue it for you that same day, as long as we get it before 3:30 or somewhere around 3:30. As to where faxes, they do get lost.
Yeah, and one thing to chime in here again, I think it was about 3 years ago, we did a member survey and surveyed all of our members, and one of the top 3 things they wanted was either we used to fax the letter of credit ticket and fees back to the member, and then we'd have to fax it to the beneficiary. Not only was it cumbersome on our end, it was just a lot easier, so we now do secured emails. So once the letter of credit's issued, the beneficiary receives a secured email with that letter of credit instantly. And as we moved on, we started prioritizing, at members' request, the online ability. And since that, we have about, I think it's nearly 65% of our members that use the letter of credit product use the online feature, and that number just keeps going up and up every day. or every week when we look at it. So
Yeah.
it is really that easy, and as we go on, you'll see why it's much easier than the PDF application.
For sure. And then, I'm sure if you guys have issued a letter of credit, you've seen this form. This is just our standard, PDF letter of credit form. All those easy fill tabs, you can tab through that, And again, you still can send them in this way, if you prefer. It doesn't matter. It's completely up to you guys. Just want to let you guys know that you do have the option to issue online or fill out this PDF form.
That's a lot more fields than the 5
Yeah.
earlier, so I would suggest the members only. Of course, the first time you issue one to your beneficiary, if it's the first time, then you might need to go ahead and fill this out. And historically, if you do want to take this route, we find it best to save that application so you don't have to key in your institution address, the beneficiary's name, and you can just go in and change the date, issued date, the amount, and maturity date.
And then this slide here, just shows a lot of the information we have out on our website, FHLBTopeka.com/letters. That is a great, tool for you guys that has a whole bunch of videos. There's a video on there that kind of walks you through issuing an online letter of credit if you guys are doing it for the first time. Or you guys can call us if you have questions about that. Then also, I'm sure you guys get a lot of questions from your beneficiaries as to, how they would recoup their money or why using an FHLB letter of credit is important. Your beneficiaries also have a video out there available to them if they would like to go look at that.
And there's also packets available out there and ample information. We've had great feedback from beneficiaries and members on the 2 videos that are out there, so I highly suggest going out and viewing them. And it's also great material to provide to a beneficiary that's only used securities and so used to pledging and releasing, and that's kind of what we hear throughout our district is now the beneficiaries are like, we will only deposit our money there if you use a letter of credit. It's less cumbersome on our end.
Yeah.
So it just saves time for everyone.
For sure, and that kind of wraps up the webinar this morning. As you can see here on the screen, we do have Jeff Steiner, our Kansas Regional Account Manager, and then Rusty Davis, our Colorado and then Western Kansas and Nebraska Account Manager, and then you also have Michael and I's contact info on there. If you guys do have any questions, please feel free to reach out there with anything. And so we do have a couple more minutes here. If you guys do have any questions for us right now about the letter of credit webinar, just please feel free to go ahead and type those in the Q&A box or the chat box.
And you can hear me babble to you all for a little bit. But really, we do mean it. No members the same. So please reach out to us with any questions. We'll walk you through anything, provide documentation. If you'd like to see that tool, please don't hesitate to reach out to anyone on that screen. And these slides will be available after the webinar. Doesn't look like we have any questions, so we'll let you guys get back to your busy day here a little early.
Yeah, again, thank you everyone for joining. Hope you guys learned a little bit here. And just one last time here, any questions, please feel free to reach out to us. And thank you.
Have a great day.